So take, for example, SPY. So, Kaylor, worst case scenario, next week, what do you think SPY is going to close at?
Worst
Obviously
case
not
scenario,
zero.
less than 5% retracement.
Okay. So what is that at?
If it's at 420, I think at the end of the day it was at 419 ish. So I'd say 415, 416 would be worse.
So 415 closes next week. Worst case scenario, right?
Right.
Okay. With that information, you can profit. That's how easy spreads are. Spreads options are about being right. So what I do is I just want to be right. I don't care about profits. I just want to be right. So what I would do is I would say, okay, let me open up a spread to make sure that if SPY closes anywhere above 415, I'll profit. And that's as simple as it gets. So what I do is I open up a credit spread, a put credit spread, which usually I post a lot because I like credit spreads more than debit spreads.
Right.
So if I open a credit spread, I don't have my account open, but if anyone does, Kayla, do you have a Robinhood or Webull or anything open? You can show me what that profit would be.
I don't,
So
unfortunately. I'm sorry.
I can do it real quick. I'm pretty fast with it. So for example, you said next week 415.
Can you share your screen or no?
I don't know how to do that fancy nonsense.
Okay.
So next week is May 7th. If I were to sell the 415 strike, in order for it to be a credit spread, I got to buy the 414 strike. I'll make $17 per contract.
So
That's
you do it by
$100 in
10, you make
collateral.
$170, and what's the expiration?
Yeah, next week,
So
next
you,
Friday, the 7th.
so yeah, so you have a week away, you make $117, and if the liquidity is there and they're actually trading on a volume of 1,000, then you could be really risky and maybe do like 200 or something crazy, right? It could do 100.
Exactly. Yeah,
Yeah.
exactly. And when I post those, I'm not getting one. I'm not getting two. I'm not getting three. I'm getting
Right.
100. I'm not looking to make $17
You
in a
make
week. I'm
you
looking
make you
to
want to
make
make 17 times
1,700.
100. Yeah.
Exactly. So when you're new and you're just starting out, sure, just take one or two or three, whatever. But once you start to get the hang of it, and you're going, wow, my probabilities, of the success is higher. If you notice uh, on my monthly plays, I have a 100% success rate.
Yeah. I don't
Show
notice
me
I
what.
actually benefit from it. So it's not about noticing, it's about reaping the benefits.
Yeah,
Like
show me a
John
swing
said, so
trade
when you
that.
came in, so what I do is I literally have an account set up for Ben, like, and anyone that's ever listening to this, and I just structure it the way he does his alerts, and it creates supplemental income to equate to about $1,700 for me a month. And for some people, that may not mean a lot, but it pays every bill I have, and then I can still do my own trading and do whatever I want.
Yeah, and then if you compound that 1,700, a couple of months, it could be $2,000, it could be
Yeah.
$5,000. Keep going. But show me a swing trader that has a 100% success rate.
I don't have it unless I follow your rules. I now my own rules now sometimes I make 6 grand in 10 minutes, but I've also lost five
Right.
grand in 10 minutes.
Exactly. So what I do is I go for the base hits. Sure, I'm not going to be on Sports Center hitting 2 grand slams a game, but if I hit a base hit and get 1 run per inning, guess what? I won the game.
And that's how I like to agree with him on that. Is like, imagine this: you hit 10 base hits, and then this is where Ben agrees that he'll go with me on these crazy calls sometimes, because if you make $1,200, you're allowed to risk a few hundred for that big grand slam. Like,
Right.
if you make so much consistently, you're like, well, I got 5 grand over here that I don't care. I could lose all of it. Well, I'm going to go ahead and just buy 3 months out on a company that just lost, that I believe in. Maybe, like, let's say Penn National. Look at it. It went down 15-20% on a $100 stock. Viacom. Those kind of companies, when they go from 140, like companies that are actually going to exist 10 years from now, if they drop 20, 30, 40%, it's like a gift basket. And that's when you go YOLO, and you're like, I'm just gonna go in the
Right.
money, not look at it, and I'm gonna buy 2 years out, and it'll cost me five, six, $7,000. But if I make 100 or 300 a contract in the next year, I'm happy. But
Yeah.
those
So
don't happen every day. You have to be really smart and understand when you're purchasing these contracts, because if you're trying to just do non-spreads and you're actually buying just a naked call or a naked put, you are putting yourself at an extreme amount of risk. And that's where Ben's telling you tonight, when you're listening, that spreads will take that risk away. And you may not see instant profit like you want, but you're going to see consistent profit, and you can maximize
yeah,
consistent profit. And that's the point.
yeah, you won't see instant huge profits, but you'll see instant huge probabilities. And that's what I do. That's where I put most of my money. I put my money on the high probabilities. You'll see that I still do my naked calls. Like I'll do J.P. Morgan or Nike or whatever. But I really don't care if those lose. Like, sure, I spent $50 on a naked call. I don't care if I lose $50 on that. I just made $5,000 on my spreads.
Right. Yeah,
So
you spend $50 and
sure,
you make 75 or 80, you're like, I'm in. Like, I just made 30% of my money instantly. You're like, that's my fun play because I saw that they dipped and
right,
it's time to buy. But what I'm doing weekly to pay my money or pay my bills, I'm sorry, and put money into my account, that's where like me, I sell
yeah,
covered calls to supplement my option buying for my naked calls. And if I
yeah,
make 15, like Ben introduced it to me when he did Ford. How long did we run Ford for months? I mean,
right, yeah, a
literally
long
making
time.
$5 to $10 a contract every day, weekly,
Yeah,
and it was
picking
insane.
up those crumbs.
Yeah, little crumbs. And then when it goes against you, you go to another place,
Yeah,
or you're picking up crumbs and you're holding 100 shares. So when it actually happens, you have 1,000 shares. You're selling 5 contracts a week. Well, when it goes up $1, you only lose if someone actually executes. You lose the profitability that's over that dollar, only on 50% of your portfolio. So therefore, you can run the other 50%, the other 500 shares, and let them keep running. And you were selling 5 calls against it every week until it happened. And people don't
yeah,
realize you can make $1,000 a month doing that, and that could pay for
right.
a badass boat or a car or whatever, your
Yeah,
mortgage,
exactly.
whatever, your insurance payments, like those people, they want that 50%. They want it. They're willing to spend $500 on a call that loses them $100 in 10 seconds, but they have no idea how to run a strategy on a straddle, or using a debit spread, or using things of that nature to actually have a realistic loss and profit value set up from the original entry. And that's where Ben, like, I commend you, because you're all about that. You're like, okay, this is the right point to get in and actually straddle this play, and believe that I'm the smarter one that knows that the people that wanted to go way up, the people that wanted to go way down, they're both wrong, and I'm right to a extent. And as long as it doesn't supersede my levels, then I'm going to be in the money and I'm going to win every time. And then that one chance that it does go out of there, so it's like this: the guy that's doing the other strategy wins 1 out of every 10. Ben loses 1 out of every 10.
Exactly. Yeah.
And when it spikes against him, he's already ready to get out. He already knows. He already has it ready to either execute and get the fuck out and get out of that play, or he'll
Yeah, I'm not obviously going to watch it go to zero.
right. Like he'll take. My thing is, when I do it on spreads, it's 50%. If I lose 50%, I'm out.
Yeah.
And it doesn't happen very often. If it does, it's the time that you're going to lose 100. If that makes sense. It's when I get
Yeah.
out at 50, I would have lost 100.
Yeah. But what I do is I buy myself time. So a
Yep.
1 week. So you said buy at 4:15 by next week. Sure, anything can happen. There could be huge major news of Alaska just blew up.
Right.
Some huge major news that could go beyond that. So what I do is I do a month out. So if you've been noticing, it's every month. So if there is that huge major crash, just kind of like what we saw this last March. I know March was kind of a red month for a lot of people, but there was no huge major news. We were just kind of just downtrending, people taking profits here and there.
Vacation money,
But I
bro.
planned exactly. I planned for an April recovery. Sure enough, we were fine.
And I think we're gonna have a
So
June retracement.
yeah, Yeah, probably will. Probably see a lot of low volumes
Look what
and
we have right now. Right now has been a fucking gift. Anybody that was long
yeah,
at the top here, I mean, you got that slight retracement, and they gave you so much. You got $2 overnight. I mean, in the SPY. Come on. And people don't understand what that means. Is it's setting up the short. Like we are literally setting up the short so bad,
yeah,
and it's becoming beautiful. I mean, I love it.
yeah,
I feel bad for people that don't understand how to trade a market that's going down, and that's when Ben's like, no matter what, we always make money. Because, and
yeah.
honestly, I make more money when the market's going down than I ever do when it's going up because I've never seen it go up like this, so I don't know how to play it.
Yeah, so that's what I do with my spreads. I plan on the market going down.
Yep.
We're at 420 now, and you're saying worst case scenario is 415, so that's where I place my trade. I go, okay, if the market goes down, I'll still make money. So I look till
Exactly. So,
people go
like,
up and
let's
down.
say you sell a spread, and you say you're going to sell a 415 and a 425, right?
No, 415, 414. So it
For
has to be above 415.
Well, I was thinking you sell a call for 425, and you sell or you buy the 415, right? If you're going long.
No, I sell the 415 put,
Okay,
and I buy the 414 put. It's a put credit spread or a vertical spread depending on your
I got
broker.
you. On the okay, that makes more. Okay, I got you. And then
So basically, all phi has to do is be above 415 at expiration. That's it.
exactly,
You get
yeah,
you get your max profit. So I go, okay, let's plan for worst case scenario. To me, be honest, I still wouldn't even take that trade. 415 is still kind of risky for me, but I mean it's a 17% increase in 1 week. That's phenomenal. I'd even go further down. I'd go, okay, 405. I'm talking nuclear holocaust.
yeah.
I'll sell the 405 and buy the 404 and maybe make like $8-9 that week. But again, I'm not getting one. I'm getting 100 of them, so I'll make $800.
And it could be in a second.
Yeah,
Like everyone doesn't realize that you could execute and take that profit instantly. You don't have to wait for it to happen. It,
exactly.
if you
Just like
make
just like today, if anyone picked up my SPY spread today, it was a pretty sniperish. If you look at it closely, I actually grabbed it right at the low of today, and right from there, I don't know what time it is for you guys, but it was around 9 a.m. Where I grabbed mine, and that's sure enough after that was the low of the day. So that spread went from $110 to I think it was like $80. So I already made $30 per contract on that one in one day.
and see right when you called that, I took my long call and I bought 10 calls for 420 at 60 cents and sold them for 90 cents about 20 minutes later.
Yeah. So yeah, you don't have to hold them to expiration. You, I just hold them till they're profitable. Sometimes I'll close out real early. A lot of them, since we've been on this huge bull run, a lot of them are already maxed out for next week and the week after. A lot of
Ben,
them
how many
have like a
times have you
dollar.
bought like you see that the spread is let's say the spread's 150 and 165 and you put your bid at 150 and it executes and then you're up I'll be
Yeah,
up $5 a contract times 10 the moment it executes. I just like sell and I'm like,
yeah,
why? Well, you just made 5% on your money in 1 second.
because someone filled that order for you. Thank you.
And that's how some people don't realize it. I'm like, you have to understand that if you're new or even if you're an expert, if you execute a trade and you make 5% within the moment, like you're like, bing, okay, I bought it, and then you look at it and you're up 5%, just take your money and go. You
Yeah,
made some people want 1% for a year. If you
yeah.
make
No, or
5% on your
or
bet instantly, it's like you are so successful. If you could do that
yeah,
every
or
time.
at least put a stop loss, above your entry.
Yeah, exactly.
Just
Yeah,
be
at least
flex.
like now no matter what, you're breaking even, and
Yeah,
you're making 1%. If you make 5% in 1 second, my goal is what I do is I typically sell. If I buy 10 contracts and I'm up 5% instantly within a second, I'll sell half of them right away. And that's
yeah.
just
No,
that's
it
just
happens so quick that you can't even post it. Like by the time I get like, oh, geez, no, I didn't want to say like, oh, I opened this, and then half a second later I say I closed it. Like by the time anyone read my open, they'll never get it.
Yeah, and that's like some people ask me like how many trades do you make a day? I'm like sometimes I'll make 20, sometimes 5, sometimes 100. We're talking about
Ugh.
options, spreads, kind of just understanding because I'm literally watching Benzinga, my friends, Jason Raznick, his company. I'm watching the Bull Traders, all these different companies, and what I see are opinions, right? And everyone has an opinion in the stock market, but nobody really has a quantitative approach where you can actually believe that it's real, other than spreads, right, Ben? Like, I mean, other than that, like,
Yeah,
there's no way to be like, hey, this is gonna happen. But you can use spreads to be like, you know what? The probability of this happening is far less than what you're hoping is happening. The hopium on the other end,
The
and
hopium, smoke it.
what you're looking at is like
yeah,
they have this hopium here. Well, I'll sell $2 above the hopium and gain that $8 a contract because I have enough money to have the collateral to buy hundreds of
yeah,
contracts. But it's always you have to make sure there's liquidity there. That's why Spy, Tesla, anything like
right,
that, Apple, Google, Amazon,
yeah,
FedEx, all these companies that have a lot of people buying contracts every day. If you make $5 a contract, there you're going to be able to sell however many you have. I mean, to an extent, you can't have 10,000 contracts, but if you have 100,
right.
but you're going to sell them. Right?
Yeah, typically, I'm typically getting 100 to 200 at a time, depending on
Damn.
amount. So, but it
Hey,
has to be, Kayla's right. It has to be pretty liquid. You have to have a lot.
okay, listen. I have a weird question for y'all. My best friend since my childhood. I've known this guy 40 years. He just inherited 500K in 4 stocks. And
Yep.
they are Cat, Cisco, H&R Block, and Freeport McWhorter. And he's so fucking scared to death. And I'm trying to tell him, like, bro, like, let me help
Sell
you.
everything,
That's what I said.
sell it
Sell
all,
it
and then
all.
start and then
And
spend
he
five
won't.
thousand dollars and learn before you do anything else. What I would tell him.
You're
Oh,
right.
keep
I
cat for
tried,
sure.
dude. I tried. He's got
I,
505K
I
in
would
four
sell
stocks.
every bit of it because he's at the
I
height of
told him the
everything.
same thing. That's what I
I would, I
did.
would,
And
I would keep cat. I've been holding cat for years, and
Well, yeah,
that's a good
cat.
dividend stock right
It
there.
just
it hit all
depends.
time high,
It also depends on his
$237 the other
taxes
day.
too. I mean, how much tax he's
Well,
gonna
yeah,
pay.
he's gonna pay a fucking
Yeah,
heaping fucking ton if he sells all that shit.
right.
That's what I tried to tell
But
him.
if he's
He
sitting on
wants
five
dividend
hundred grand
stocks.
and he has 500 grand invested in zero cash, then
Yeah,
he needs to sell some cash. He needs some
he got
cash.
37,000. He got 37,000 in cash. 505,000
That's
in
not
stock.
enough, in my
Yeah.
opinion.
Well,
Damn.
I just joined in, but another thing is it depends on where he got in. Because if he was in
And no, no,
like
no,
a
no,
decade ago,
no, no, no. He inherited this.
And it doesn't.
They
And,
sent
and it
him
doesn't strictly matter where
1,400
you come
shares
in.
of each
It's
one of them. He's got like 130 grand in each stock,
Just,
basically
just
125,
start,
136, whatever.
just
They're
start
all
selling
around the
covered
same amount.
calls.
yeah.
Start selling
So
Ah,
covered calls
yep,
on them.
right?
yep. And then
And
buy
just collect premium.
and buy puts to protect yourself.
Yeah,
Damn.
yeah. A married put.
Yep.
I tried to tell him, dude. He won't listen to me.
I
He's
do
like
it every
3 days
time.
into the
Every
stock
time
market.
every time the market does this, if I'm up, my portfolio was up 37% today. Okay, so I went at the top when Hamza said it's time to short the QQQs and short Facebook
Mm-hmm.
and short everything. I did, and I was like, you
Right,
know what? I believe you. I'm going in, and I made 11% and 2 candles, and I was like, you know what?
right,
That protection that I wanted to protect my whole portfolio for a month, and I made it in 10 minutes,
right.
and I sold, and I'm like, there's no reason to continue to hold a hedge if you just made now if my whole portfolio could go down 11% tomorrow, and I'm even.
And let me look.
well,
Yeah,
another thing that you do, Kaler, is something I love. Is like you'll know, like you can't always
No,
know, but
the
you're like,
QQQ is
hey,
going to go
Hold
up,
on,
dude.
George. What did you say, John?
The
another thing that
QQQ is
like
going up.
another thing that you do
Uh,
that like I think is really killer is like you'll be like, all right, I think SPY is up today. You'll buy your SPY call in the beginning of the day, and then throughout the day, you'll just be like, all right, SPY put, sold, SPY put, sold, SPY put, sold, and then SPY fucking skyrockets.
I'll
You,
sell my call.
yeah,
No, Tom's
like,
is right. QQQ is going down. It broke market structure with a big body. Yep.
They just opened up Monday and Wednesday expirations for QQQ.
So I see what you're saying, John. Like, so what I'll do is like I hear if I'm long SPY and SPY runs and I see my call running from $100 to 190, I won't sell it. I'll actually wait till it gets to a top and I start losing about 2-3%, and then I'll short by buying puts, and I'll buy the puts 3 or 4 or 5 times down, and then I know where I bought my call originally, and I'll buy 5 or 6 of them, and then sell those calls after I just made with the profit that I made shorting my original play.
Damn, that's really smart.
yeah, like he like buys puts on the cooldowns because like he's like, all right, SPY should have runs today, but obviously any stock that runs has to have
cool
like
down.
a cool off. So like as it's
Yeah.
cooling off, he buys puts so like he can hold his calls.
Yep.
Yeah. Hey, I gotta run. Can I leave you guys with one more analogy?
Yeah. Fatality.
So buying naked calls is like playing roulette. You know, you can make a lot of money, you can lose a lot of money because you're just betting on one number. But buying spreads is like me going into the casino and going, hey, instead of a number, can I just bet that the ball's gonna land a number?
Yeah.
That's betting both sides. Is that how that works? That's betting both sides.
Not even
Ben
not
is
even betting
Ben
red and
is
black.
the
It's
casino.
exactly.
That
Not
does
not
That's
e-
fun. Shit, why not?
not even betting red or black. Just basically going, hey, I bet you the ball's gonna land on some number.
It is.
Well, why not?
And
That's the
then
safest play
he's
ever.
saying
Isn't
that
the
here's what he's
safest
saying.
play?
He's saying the ball's going to land on one number, and then the odd chance it falls off the table, then I lose
Right.
like $10.
Exactly. So they're saying, okay, well,
Oh
we'll
my
take
God,
that
you
bet.
can't get any safer than that, can you?
No.
Yeah, they're saying, okay, you can take that bet, but you're not going to make a lot. I go, yeah, I know I won't make a lot, but my probability is high.
Right.
You know,
Oh, I
there's not
see.
there's not going to be an earthquake or a huge gust of wind that's going to knock the ball off the thing. So I'm going to take that bet. I'll bet that it's going to land on some number.
Yeah, somebody else is betting that the card's going to land on a jack of spades. He's betting that the card's going to flip over.
No,
Yeah.
like I said
Yeah,
earlier, I don't have
Someone
time.
says heads or tails. I say, I bet it's going to land.
It's going to land. It's going to be somewhere. And he's like,
It's
it's
on
not
the
going to
fucking
land
table.
on the top where it's standing straight up and there's no side.
Exactly.
All right.
That's basically what I do with my
Ben,
spreads.
you're the
Take
man.
low
I
profits
appreciate
with
you
a high
doing
profit.
fucking shit, dude. You've been here for the beginning and from the beginning, and you've always helped out with everybody, and you don't ask for nothing. So you guys are the one or two of you that are listening to this. You get a lot of stuff from somebody that he could charge $5,000 to give you 10 minutes of his time,
I like that.
and you guys get it for a small time. So I appreciate you, Ben.